Hey, what is going on, Crypto Charge team? And welcome back to another edition of the Ask Maddie Show. We do this show every single Wednesday where we take your guys' questions from around social media. We pick some of the best ones and then we answer them live here on the show. We also go live on Mondays with After Hours. We discuss crypto news. And of course, we come from CryptoCharge.com where we go live 5 times a week there, cover technical analysis every single day. We have our learning center and our coin library and our Discord. You guys get all of that value for 50% off, so $49 a month. Plus a 30-day free trial with code YouTube. If you guys forget code YouTube, you don't get any of that. So make sure you guys do that. Come check it out. We got a fair amount to talk about today. You guys had questions about XRP, 4-year cycle, Telcoin. Then we're going to get into some technical analysis on Velo and maybe a couple others, just depending on what time allows for today. So we're going to get through all those questions. If you guys like our show, you guys want to help support us, dropping a like and comment below helps us greatly push our show out to more people. So let's start with the first question here from HockeyDad6211. One day ago, right now, XRP is exactly the price it was on January 1 this year. With all the positive that's happened with crypto and the XRP specifically, would you expect a better result? No. I think that, first of all, expectations around timelines are just like a very weird thing that people have. And we're going to talk more about that this is maybe one of the later questions here that was brought on stream. But with XRP specifically, I think that there's been so much frustration and maybe even changed the expectations of what would happen after we got the breakout because it's just been suppressed for so long. We have seen incredible XRP performance when we think about the growth from the bear market lows, the accumulative phases, even top of accumulation in the bear market, because obviously we look at ranges. XRP is still up quite a bit. It's up quite significantly, from our accumulation prices. So for some people with very tight timeline expectations, it is frustrating, or, you got into XRP at a certain point and now, you feel like your performance is relatively flat because of your timing. Totally understand that can be frustrating, but we have to remember that our timeline expectations don't necessarily, correlate with what we're seeing on the charts. And I think that one of the bigger points that's being made here with this question is, people look at the company Ripple, which of course is a completely different conglomerate than the digital asset XRP, which is, something that runs all on its own. It's permissionless. You don't need permission to build on the XRPL. You right now could go build your own application on the XRPL without asking for permission from Ripple or paying Ripple any money to do it. So big, concept that we need to understand there. Ripple has done very, very well as of late, right? We know that they won the SEC v. Ripple Labs lawsuit with the acquisition of G Treasury, acquisition of Rail, Ripple Prime. There's just so many huge steps that are being made right now, but understand that those fundamental steps don't mean that you're going to see that immediate reflection in price. And it's not a bad thing that you see that little bit of a disconnect there between the commodity and a entity utilizing that commodity. Tech as a whole is always going to be a asset class that reacts more violently to any sort of macroeconomic news than other assets. And you'll still see, regular stocks, do poorly if there's announcements of war, geopolitical tension, or tariffs, or the economy looks weak, jobs, labor market looks bad. All these components can affect the risk on markets very, very dramatically. So specifically though, when you look at crypto and DLT as this like hypersensitive vertical within that tech stack that we pay attention to from an investment standpoint, it is going to see the most volatility. And we've had a lot of really, really intense headwinds this year, that have really made it difficult for risk on to make those continued flurries higher. So we'll do a quick little review, guys, here of XRP. And again, I think it's important when you get frustrated about a year time frame, 6 month time for whatever, that you zoom out and you do a quick little price study of the entire market, because understand that most of this time that we're in, the market as a whole is going to be sideways, corrective, consolidative. That's the majority of where we are with crypto. And those impulses are generally very, very quick. When we look at even the initial peak here for XRP in 2013, we didn't start breaking out to new highs for almost 1,200 days. That reward obviously was pretty significant for holding through all of this, volatility and, the rallies that were very short-lived, the retraces, and then finally seeing those breakouts. And then, of course, we waited an even longer time after we created this 2017 high. So it took us almost, let's bring this in here. It took us almost 2,500 days before we popped a new high here for XRP. And I think that we have a lot higher to go. And you look at where we are as a whole on this weekly chart here, this has actually been a very short period of consolidation here on XRP from December of last year forward. So yes, if you are looking at year over day performance, you might be disappointed. But that's really not, unfortunately, how investing works, especially if you want to be a true either cycle-based trader or long-term investor. this little tiny piece of price action here, if this dictates, how well you think something's going to do, moving forward, or, if the performance is where it's supposed to be because of what you're seeing fundamentally with narratives around the utilization of a certain asset, you're just going to always be very disappointed and make, emotionally charged decisions. So, we talked a lot on our show about the areas of interest on XRP. If the current level around 207 is lost, and that's probably going to put us closer to like a $1.35, $1.34, huge, imbalance that we did wick down to on the aggregated chart there. But there is potentially some room for XRP to come down and still actually be maintaining that macro uptrend. And I know I'm going to touch a little bit more on this later in the show, but it's important that when you guys are investing and you care a lot about an asset long-term and you're bullish, that you understand that this trend can take all kinds of twists and turns that you're not expecting, as far as the shapes in which they create those higher highs and higher lows. But in all reality, XRP could come down as deep as 75 cents and still be creating a macro higher low that would suggest long-term uptrend for still potentially decades to come. You have the 2020 low here at 13 cents. You have the 2021 low at 18. You start to set new lows here at 28 cents, 40 cents. And of course, it sucks seeing a lot of those gains erased. But this is a true trend. True trends have long, continuous higher highs and higher lows that are being created. And we are absolutely doing that here on XRP. Higher high, higher high, higher lows, and of course, we'd rather see that higher low come in at one of these more shallow areas of interest. It very, very well could. But I just want you guys to be aware of what that really, truly looks like in a long-term uptrend. When price is down here at 74 cents or whatever, if that were to be the case, the interest is completely gone, right? No matter how bullish the news is. So just remember to have a long-term plan, guys. Look at ROI, add the stuff that makes sense ROI-wise, because otherwise you will be disappointed. Linger on that one a little bit too long probably, but it is what it is. Let's move on to the next one from Beam Zappa 6266. What do you think of all the talk about the 4-year cycle was following the 4-year business cycle? The mirroring looks very close, especially with the way we staggered up this cycle. Do you think there's a chance this selling is prompted by the expectation of a 4-year cycle, and when QT or quantitative tightening ends and the business cycle picks up, could it push through selling? I thought this was odd cycle just because it was based within an arbitrary time frame and not some actual fundamental driver base. So first of all, well-worded question here. I think this is something that we really should be, talking a little bit about here. So a couple, components when we're talking about 4-year cycle, and I think that maybe we've blurred the lines a little bit here on what that 4-year cycle means. So you look at the 4-year business cycle, and a lot of investors and analysts will look at that as for the trad markets as to when we can maybe expect economic expansion and contraction, and when we can expect new highs based on those previous cycles of that economic expansion and contraction. Now, there will be elements that maybe disturb the 4-year business cycle, and one of those big components is going to be the federal funds rate. So how the Federal Reserve is approaching the restrictive nature of credit availability, the cost of that credit, that affects business cycles very, very dramatically. And you can artificially, essentially, right, end what you've seen as those typical business cycles, or even lengthen them, if the Fed employs policy that suggests higher for longer or lower for longer based on how restrictive they are with that credit. What we've seen different this cycle compared to the last cycle, specifically with that macro picture, is you had in the last cycle where we had, of course, the bottom was already in for the most part on Bitcoin. We actually ended up sitting at a higher low on Bitcoin when we came in for that higher low during that C19, that COVID announcement. The big macro difference at that time was that interest rates were already pretty much at zero, right? We didn't have anywhere to go at that point. And then you mix that with the Federal Reserve just doing, trillions of dollars in money printing, stimulus checks, right? UI paying people to stay home for months on end, more than they ever would have earned at their regular job. And that is just a very, very dangerous long-term catalyst, right? So then you look at the market really, really doing super well during that time. So when we finally do acknowledge, and the Fed acknowledges that the inflationary environment is not transitory anymore, and it is a lot stickier than we thought it was going to be. And I don't think that these guys truly sit there and think that it was transitory. I think that it was created this bubble. So what we started to see was a very sharp end to the last cycle, as well, because you started seeing this hiking. It just went on forever and ever. And then you mix in FTX and all these other catalysts, and of course that's created that next bear market environment. So going back to the 4-year cycle, right? There's a lot of components that can change that this time around. We also look at, where we are with the 4-year cycle within the halving theory, which is another big component within, we're talking about the 4-year cycles. And that's what people are looking at, that there used to be a supply shock, essentially, when you see that halving reward for Bitcoin. And we started to kind of see that there was like this overlap between the expectation of like the 4-year business cycle and then, Bitcoin's, halving. But what we saw is a deviation from that this cycle. We actually saw a new high ahead of the halving. So that actually, kind of disturbed that side of things. So can we still potentially at some point in the future resume, that trad 4-year cycle? For sure. But it's not something I really ever want to hang my hat on fully, just because I think there's a lot of factors that can change all of that. Even if let's say you have all of the right economic environment from the Federal Reserve, when you have geopolitical tension picking up, risk on assets will sell off very, very dramatically from that. And you can see short-term seasonality trends, in the way that the market moves. So I think that, first of all, again, really great question. I appreciate you bringing something on of this caliber, because it's important that we discuss it. For some of you guys, this might feel a little bit dry, and something that feels like it's not that important to you. But when you think about those long-term cycles, what's really going to drive those is going to be maybe even longer cycles. So we'll take a quick look here at Bitcoin, because I know we have a few more questions we want to get through here. But again, big difference between the last 2 cycles. Let's actually roll back out to the spot one here on the aggregated chart. You even look at the last cycle from 2015 through 2018, right? Really, really intense in there. You had a pretty good crashing structure there on the weekly. But when you even look at this last cycle in here, so we're going to go from, let's just say, C19 forward. So the low was actually set ahead of C19 announcement, right? That was already set in here. This ended up being a higher low. You actually cleaned out an imbalance, but we're not here to linger on that. When you look at that C19 bottom, though, here on the weekly chart, you really see extremely minimal pullbacks for almost over a year, right? Almost 400 days from bottom to push to that top. You saw maybe a couple weekly candles here closing on the bear side with very minimal correction. You get your very first pullback here, in April of 21. You come back, you push for one little bit more high here, and then we come back and we actually do a really good correction in here, and we satiated some pretty good imbalances that got left behind. In a perfect world, I would have rather seen maybe close to like $13,000 here, but nonetheless, you resatiated the previous top in there. That's good enough. This cycle, we have done things very differently. And I think that this is actually a better cycle, a structure that could actually set us up for longer cycles. And what I mean by that is, with these corrections, they're taking longer, and I think that's not a bad thing. This correction in here took almost 250 days. This correction in here took 112 days. We're currently still in one right now. And now, short term, what you'd want to see is those previous tops before that last correction set in hold as our new floor of support. That would just suggest immediate short term uptrend. Currently, I think that we have definitely some more room to the downside. I think that we could find a bounce here in the next like $1,000 to $2,000. But if we are going to come in for a deeper correction, that 70K area of interest is still an area where we could find, support as well if we were to come and dig down deeper. And that would still support a very long-term uptrend, right? I am right now short to midterm bearish on Bitcoin. I have been for about a week and a half, almost 2 weeks now, suggesting that was my theory. There are areas of interest where we could catch on here, but this cycle and the structure of the cycle, because of all the stops along the way, sets us up to potentially have more corrections, but maybe not as long of a correction as we saw from this last bear market here, because all those imbalances got left behind. We didn't really do that in this cycle. We didn't leave a ton of those imbalances behind. So we have more possibilities to pick up sooner. So I know that was probably a little bit more than what the question initially asked, but I think it's important that we kind of look at that picture as a whole, both on the charts as well as fundamentally. Atlantic Living, repeat customer. Maddie, you did a video on Telcoin a couple weeks ago, yet you did not mention the recent price appreciation. I see it all on X. It's important to review what's happening with Telcoin. So of course, anytime you see, price do really, really well, that you're going to get all this attention. And, we're very familiar with this with Zcash right now. Suddenly, you get this big push in Zcash while the rest of the market is kind of just selling off and very cranky and choppy right now. And suddenly, the targets that I have of, 1400 is kind of like my top, start to seem like the low end of things, and 10K seems to become the reality. And, all that hype sets in around it. And, Zcash is the new best thing. And, privacy is super, super important. And those narratives can shift very, very quickly when that type of price action sets in. So I took a quick peep at their website. Again, guys, please check out your research, start your research at coinmarketcap.com. It gives you a lot of good quick stats. You guys have quick access to their website, white paper, their socials. You guys can check out, on-chain data there. You guys can also look at the markets that are available, and it'll kind of tell you a little bit about what that volume looks like on each of those major exchanges. So we're seeing that right now. For example, KuCoin has the most volume with almost $3 million in volume right now. MEXC, follow up there around 500 million. used to be 500,000. Bybit was 680. So, you can kind of see who some of the bigger players are too. This is also, if you do have access to some of these higher volume exchanges, that's generally where you're going to want to trade, because it's going to give you better liquidity, better execution. If you have larger orders, higher likeliness of those filling with a lesser spread. So if you have access to, for example, like the KuCoins out there, or the MEXCs, those are going to be a little bit more of your liquid marketplaces. As far as, just quickly peeking at their website, they're focused on kind of like, their own synthetic digital dollars, or, for different countries, direct payments to merchants, a little bit more of like that SaaS plug and play. Reminds me a little bit of like the AMP model. Again, not super well versed in this. I can see obviously Explorer's Etherscan. So this is an ERC20 token, Ethereum based token. So it syndicates value from the ERC20 token standard. So again, make sure you guys are doing your fundamental research. We'll take a quick look at the charts, because it sounds like that was our fault here for not looking at the chart after discussing it. Let's take a look here at TEL. So we're going to go to the spot crypto. Let's come down to the daily here. So yeah, we have had a nice little breakout here. And again, a lot of the altcoin market right now is suffering below their major moving averages. Zcash and a handful of others really kind of being the only ones that are showing some strength over their major MAs. But you guys can see that we are above the 50-week, 100-day, 50-day, and 200-week. The 50-week we just broke over here recently in the last few days. And it definitely has been very good price appreciation. Let's see what we have on RSI for relative strength index. And let's see if we're we're heading towards that overbought territory. We were just here actually a couple of days ago. We backed off a little bit here. But when you see these periods on RSI and you see that there's been pretty big rallies, they can be indicators of maybe a short-term correction or trend reversal after that type of price action. So most importantly, we found the bounce in the right area. And again, when we have these previous big tops in here, you guys can see we tried to lock that back here in April 24, bounced and then failed, broke right back down to the cumulative range. When we broke out here in November of last year, we actually just satiated that over here at the top of November this year. So that's a really good support bounce in there. It shows that there is buy demand in the spot that we want to see it, showing that there is a long-term uptrend that's absolutely intact in here, just as we talked about with XRP and with Bitcoin. You guys can see that uptrend is still very clean. And I don't ever want you guys to put all this weight on trend lines or things that suggest like structure or a pattern. Those are really good indicators to use, but we always want to use those in conjunction with our major support and resistance levels of low Fibonacci's. It should always be a secondary form of analysis. You can also see there's kind of like an upper bound to this channel as well. So it's been a pretty clean uptrend in here. Obviously back down here was the back test to get involved. If Telcoin were to offer maybe 0.0043 again, that would be potentially a good entry, and it would still be creating that higher low in there. I don't know if you get that same low here again previously. You probably need to see Bitcoin dominance go up quite a bit and Bitcoin come down quite a bit more. Again, I think that we are in a spot where Bitcoin could find a bounce here and maybe show some sort of at least relief rally in the short term. But again, that's going to be one of the things we're watching for there. So of course, if you guys are looking for target-based stuff, using the Fibonacci is a very helpful tool. Using the previous breakdown levels, this is a big imbalance here at 1.5 cents. Long-term, maybe looking at 10 cents to upwards of maybe 23 to 27 cents. But make sure you guys have that multi-step exit in place there. Overall, though, again, very clean uptrend, more imbalances to the upside that suggest target making can be made ahead of new all-time highs, and a nice break above the MAs right now. But of course, never ever recommend you guys getting into rallies that are this hot, that are up, so significantly off of that bounce, right? We're up currently about 145% in just a matter of days here. And then RSI is also flashing a little bit of that overbought territory. So please be careful, guys. Watch for the higher low, set the limit, let the market come to you. Don't chase the market. Yoska 6246. Can you guys cover Litecoin? Sure. Let's take a look at the chart there. And I'm kind of glad that people are paying attention to some of the old coins out here. And not saying that they're best things since sliced bread when it comes to the tech. And I know that especially, with some stuff I'm involved with now, especially with my recent Ondo position, that there's just tech out there that's really, really attacking the, RWA and DPIN stuff at such a high level. It's hard to say long-term, like, yeah, I'm a super huge Litecoin bull. But there's big technical opportunities, I think, in a lot of these older charts, and especially ones that underperformed last cycle. I think that some of those may do really, really well this coming cycle. So we'll do a little price study here on Litecoin. We've had in the past year some pretty decent support come in here right around the previous 2013 high. So kind of what Bitcoin did in the last cycle, just dipping kind of below that previous top, and they're finding some support and then moving higher. If I had to have a little bit of a bone to pick, it'd be down here at $6. That's where we should have really closed out that imbalance. I think we're well past it at this point, right? Especially when you have this many years of price action. I think it would be a very difficult narrative that we'd have to swallow in order for us to deviate below the 2018 and 2022 lows in there. Taking a look here at the next major support level, we got $50 as a big support level in here as well. We found a lot of support here in 2022, again here in July of 24. And then on this wick here, that's on, again, the aggregated chart, you came pretty close here to testing that as well. There has been short-term, although not huge higher lows in here. There has been a series of higher lows developing since basically November of 2022. We have some short-term imbalance here on Litecoin up here towards these prices. So you have the breakdown in here from 166. That's an imbalance that I think is left wide open in here. This is a major resistance level here, right around 137. And it's just been kind of like this sideways booking in here. I would say that this looks very similar to QNT as well. QNT has had like this very weird elongated pennant, but like very sideways within the pennant, not really creating as many of those like higher lows on the way down. So I think that overall there's potential for this to continue this long-term trend growth in here that's technically been intact since 2018, 2019 here, those series of higher lows. But really our major resistance is still 130 to 170. Every time we come up in that level, we've had really, really big difficulty breaking back over it. Of course, you can bring your fibs into this. Let's dress this down and then dress it up with just the fib in here. You guys can go from two different ranges in here. I do recommend if you have two good size crashing ranges, do one, do the other, do a cluster, see what kind of overlap you get. From the more recent range, we get 620, 980, and then let's call it upwards of 1500 as those bigger targets in there. If we do our cluster, we grab another range in here, which is very similar to the current range, but it is slightly different. We can see that those values are actually very close together. You get like 600 to 620, 950 to 980. All these values are relatively overlap values. So, either of these ranges is probably fine as far as Fibonacci's are concerned, and that's how I'd do some of my long base target making. From current market to the 1.618 is roughly maybe a 6x to a full extension would be closer to like a 15 or 16x from current market. Definitely still in deep accumulation right now, and it's probably a decent DCA opportunity. Let's finish out our last question here. We have from Otto83AT, Velo, please. Let's go ahead and do it, Velo. And we'll go ahead and grab the aggregated chart here. Let's stress it down, drip it down, dress it down, and take a look here together. So Velo was one of those that had a lot of that initial, bad timing as far as launching at the end of a bull market. They are focused on DeFi as a whole. They originally launched on Stellar. Now they're, EVM compatible. They've definitely been making strides on a fundamental level to, create more interoperability and accessibility. And again, a lot of these protocols require sometimes time for people to test and develop on these networks. I think that we have a very, very short patience window for how long we'll allow this tech to breathe out and show what it is before we say it's good or bad tech. We had a big cup and handle in here that's been breaking down a little bit here. So short term, I would say that this cup and this, what is the handle in here? This breakdown in here, short term does set us up to test some areas of interest that I was really not expecting here for us to be testing, based on what we were seeing with that cup and handle in there. So we're sitting on kind of the upper band of where that area of interest would be, where we could start to find the bounce, but the deeper area where we found a lot more support previously or resistance previously is like 0.003 to 0.004. Short term, if we're able to, see Bitcoin maybe find a little bit of its footing and we can start to reclaim, let's call it 0.009. So let's almost a penny there, and then maybe even this level is 0.008, 0.007. Those would be areas where we would just, potentially see this maybe not matter so much and be able to see that short-term reversal back up to, 0.02 and beyond. So this is short-term, a very important support level, and the gap down to the next major support is quite deep from current market. So I would not recommend any market-based orders for the market as a whole right now. I really think that this is either a limit-based environment, meaning that you are good with your positions and you are just going to be patient and wait for what we know to be the next big area of interest, or to set on a daily DCA, not a weekly DCA, not a monthly DCA, a daily DCA. And the reason that we do that is to capitalize on the everyday volatility. And some days you might buy a little higher, some days you're going to buy a little bit lower, but it allows you to, basically take the emotion out of it, let the market just, give you a little piece of it every day, and you'll be impressed more often than not, especially if you're DCAing on the way down, how you lower your average very aggressively. Obviously, after you see the market kind of come back up over a couple key levels, we can turn that DCA back off. We have a lot of different ways that we can deploy. I would encourage you guys to check out on cryptocharge.com. It's right on the homepage there. It's also in the Learning Center. It's called the Consistent Investor Strategy. It's just under 50 minutes, and it is a great comprehensive video for you guys to watch, whether you're new or not. Just covering everything from diversification, for the 6 or 8 different ways that we look to deploy, setting a budget for yourself, talking about how to set aside dry powder, when to use that dry powder. There's a lot of tools in there for you guys to help you guys understand that strategy. So again, with code YouTube, you guys can get 30 days free to check that out. All the resources are free for you guys to check out during that time, as well as our Discord community with code YouTube. So I hope you guys checked it out. Hopefully it was helpful for you guys today. Again, leave your questions below. Did we create more questions for you guys? Do you have questions about other stuff? Did we talk about some content today that you'd like a little bit more color or depth on? Leave it in the comments below and we will take a review for next week. Otherwise, guys, we will see you guys again on Monday for After Hours. Have a great rest of your day.